Hi everyone. Good evening. How has your day been? How has it been your weekend? So we're not going to waste time. We're going to go straight into today's meeting. So I'm going to share your screen. I'm going to share my screen with you now. Not so many of us are online yet. So I'm going to take a moment to wait for a few more people to join us. So while we are waiting for others to join us, let me know if you can hear me. If you are online already and you can hear me, please do let me know. Okay. Good evening, everyone. Good evening, good evening. Let me know where you're watching me from. Let me know where you're watching me from. Good evening. Okay, thank you very much. So we can start. I can get responses now. You said you can hear me. So our topic for today is how to invest in the Nigerian market as a beginner. How to invest in the Nigerian market. Just a moment. I want my other screen. Let me use the other screen. Okay, good. So investing in Nigerian stock market beginner's guide. So I'm going to tell you, thank you very much, David, watching from, okay, David is watching from Ogun State. So we're going to start straight. And for those that are joining us later, I'll expect them to go back and watch from the beginning because the time we slated for this meeting is 6 p.m. And I'm not going to keep others waiting just because some other people are not here. So investing in Nigerian stock market, the beginner's guide. So how do you invest in the Nigerian stock market? Why do you need to invest in Nigerian stock market? What is this stock market all about? What is stock? What is shares? So many people don't understand this. Why are we even doing this? Am I doing this to make money? Am I doing this to multiply my money? Why am I even investing in the stock market? All of these you're going to find out, and even a step-by-step guide on how to get you started. I'm going to be showing you all of this in today's webinar. So without wasting time, let me share a quick brief on what we'll be looking at today looks like. So today you're going to be looking at what the I know you came with the expectation of you want to know about the stock market, but there's definitely, because most of us we have a preformed information, we have a notion of what the stock market is in itself. Can teach you, before I can help you learn, I have to help you to unlearn what you have learned over the years. That is not what the stock market is. We have to remove that first. Then you can now learn what the stock market is exactly. Not, I'm going to help you to take that away from your mind so that you can have a fresh page, a fresh mindset to invest in the stock market and stock shares and equity explained. So when we talk about stock shares and equity, what exactly are we talking about? So we're going to learn that. Then why should you invest? So why should you even invest in the stock terms of investments? We have other fixed income investments, so many investments, land investments. But why do you choose stock markets? You're going to find out that also. Then the types of stocks and who should even invest in them. So we have different types of stocks, but should you as a person invest in every type of stocks? You're also going to find out that. Then what to consider you need to know before you even start investing in the Nigerian stock market. What are the requirements to get you started? How to get started step by step. Then the common mistakes that cost you your money. So many people come into the stock markets and they multiply their money, but there are some other people that when they come into the stock markets, they also lose money. So what are those things that you are doing that is making you lose money, or those things you can do that can cost you your hard-earned money? You also find out in the course of this session. Then difference between the fixed income and the stock markets, and we're going to take questions and answer. So without much ado, let's dive in. So, what stock market is not? What stock market is not? Just like I said earlier, that I'm going to show you what the stock market is, but I also need to demystify what the stock market is not first, so that you can have a fresh mindset to pick what the stock market is and take away those old information you had about what the stock market is and is not. So what the stock market is not. Now let's take a look at what the stock market is not. The stock market is not for making money. I know I'm busting your bubbles right now. But the stock market is not for making money. I know a lot of people come into the stock market because they think that when I come into the stock market, I'm going to make money, I'm going to do this, I'm going to do that. Are you coming to make money in the stock market? If is the notion you have carried for long, then let's break it now. You are not coming into the stock market to make money. Now, I'm not going to talk about the three M's of money. I'm just going to mention this. We have three M's of money, which is making money, managing money, and multiplying money. When you make money from your active income. When you manage money, you manage the resources that comes from your active income. Then you put that into your investments, which is multiplying money. So the stock market is not for making money. It doesn't fall into the category of making money. It falls into the category of multiply your money. So when you're coming into the stock market, don't come with the mindset that you're coming to make money. You're coming with the mindset that you are coming to multiply. So the stock market is not also for gambling. It's not mini, money more. It's not let me try this, let me try this. The stock market is something that you can learn and you can know exactly what to do. So you don't need to try it out. You don't need to say, let me try mini, money more. Okay, it falls on C, I take C. It falls on this particular stock, I take this stock. No, that's not what stock market is. When you get adequate knowledge about stock markets, you can know exactly what to do and multiply your money in the Nigerian stock market. So it's not a gamble. It's not a gamble. It's a skill. You can learn it. It's not a get rich quick scheme. So some people will come, which stock can I invest in now? In the next 2 months, I want to make 100%. Even some of your businesses are not making 100% in 1 year, but you want to come into the stock market and make 100% in 2 months. It is not a get rich quick scheme. Can you make 100% in 2 months? Absolutely. Absolutely. I've done that. But can you also lose in 2 months? Absolutely. Maybe not 100%, but you can also make loss in the 2 months, hoping that you make 100% returns. So which means that the stock market is not without its own risk. So when you're coming into the stock market, don't come with the mindset that I want to quickly come and make money 2 months and I'm out, 1 month and I'm out. No. The stock market itself is a business. People are into businesses. Just the same way you are also into your own business. You are trying to make profits. The same way every organization, every share that is listed in the Nigerian Stock Exchange is also into one business or the other. So it is not a get rich quick scheme. It's not a place for only the rich or financial experts. So some people think that, oh, it's only some people know about stock market. It's only for the experts. You don't have to be an expert to invest in the Nigerian stock market. You only need the knowledge you need to start with, which is why everyone is here this evening. That is why you are here today, and you are going to get that knowledge. You don't need to you don't need to be an expert. You just need to know something beyond what a layman knows about the stock market to get started, and you will get that tonight. So it's not a place for the rich. You don't have to own 100 million to start. Even as little as 1,000 naira, you can get started in the Nigerian stock market, and you continue to increase your stake as more income comes, and ordinary people like you can own a piece of companies and profit as they grow. I'm going to explain that in the next module. So we have seen what stock market is not. I said it's not for making money, but for multiplying money. It's not for gambling. It's not a get rich quick scheme, and it's not just for experts alone or for the rich. So making money, managing, multiply money. So which category does the stock market fall into? Is it making money, managing money, or multiply money? Let me see in the comment section. Then we go straight into the stocks, shares, and equity explained. So before you invest in the stock market, I'm waiting for your comments. The stock market, is it for making money, managing money, or multiplying money? I want to know in the comment section. So now, while I'm waiting for your responses, stocks, shares, and equity explained. Before you go into anything, an adequate knowledge is required before you start. One of the mistakes you can make when you want to invest is not even knowing what you're investing in is all about. So before you invest at all, you want to find out, what exactly am I going into? What exactly am I doing? And that's what I'm going to be explaining now. So when we talk about stocks, when we talk about shares, when we talk about equity, what does it mean? Yes, thank you very much. Multiply money. Thank you very much. So what exactly does it mean to what exactly does stocks, shares, and equity means? Let's go straight into it. Now we said from here we have a stock is a collection of shares in one or more companies. Now look at the slice of bread I have here. When we are talking about a stock is like a complete loaf of bread. So it means the collection of all the slices of bread that you have. But a share, just like you have a slice of bread, a share is just a slice, a portion of the whole stock. So when you're saying, I have shares, I have shares, I have stocks, you don't even know the difference between stocks and shares. So your share is like your portion from the whole collection of shares. So from this single slice is your share. This single slice is your share. This single slice is your share. But the collection of everything is what we actually call a stock. So now, if you have understood what stock and shares is, and another thing with stock is the collection of all the shares you have in your portfolio can also represent a stock. Let's say you buy from company A, B, C to D. The combination of A, B, C, and D is your own collection of shares, which makes it your stock. So having understood what stocks and shares are, what exactly, thank you very much. Stock market is multiply money. Know, if we known, yeah. Thank you very much for multiplying money. I love that everyone is following. So having understood what stocks and shares are, what then is equity? What then is equity? Now, when you hold equities, just like we have talked about stocks and shares, it means you hold a part of the company and are entitled to rights, certain rights. Now, when you hold a share, I know it could be very confusing when we talk about stocks, we talk about shares, we talk about equity. Sometimes you are wondering which name should I even call this thing exactly? But what does your equity represent now that you have understand stocks, now that you have understood shares? What exactly are or what exactly is equity? What do we call equity? Now, when you buy a share, a portion of that company, it means you own that portion. Now, look at the previous slide. Let's say you bought a single slice of this. That single slice is your own portion in the stock market, in the particular company. Now, having that particular one, let's say that particular one you own represents this deflated balloon. Can you see my cursor? It represents this particular balloon. Now, if there is an increase, if the company is making profits, it means that the value of what you own. Now, equity simply means what you own. So the value of what you own increases. Say, for instance, you buy a particular stock. Let's say Dangote Cement. You bought Dangote Cement at 500 naira. If the stock price increases to 530 naira, it means that, let's say you bought 10. It means that having bought 10 of that, if the price increases to 530 naira, your quantity remains 10, but the value increases. When you bought 10 shares at 500, that's 5,000 naira. But when the value increases, when the price changed from 500 to 530, it means the value of what you own in that company has changed. So now is now 500, 530 times 10, which means that you no longer own 5,000 in that company, you now own 5,300 in that company. Do you understand? Let me know in the comment section. Are we getting it? Are we getting it? Stocks, shares, and equity. Are we getting the difference? Please let me know in the comment section. So what you now own, the quantity you own is the same, but the value of what you own has increased. So when the company is making profits, the value of what you own in that company increases. But peradventure the company is making a loss, then the value of what you own also reduces, just like we have in this deflated balloon. So if you bought for 500 and it's now 1,000, then there is a significant increase of 100% from this level to this level in what you hold, the value of what you hold. So your 5,000 naira suddenly becomes 10,000 naira, even though you still have just 10 pieces of shares, but at even 10 pieces of shares, but at the end of the day, the value of that 10 pieces of shares has increased from just 5,000 naira to 10,000 naira. So that is what equity is. Share of his profits. So you can make profits. Thank you very much. Yes, you are getting it. Thank you very much. So you can make profits. Oh, to make comments. So all you need to do is just subscribe. Click on the subscribe button, then you'll be able to ask your questions and you'll be able to share your comments. So please, if you are here and you're not subscribed to it and you want to make any comments or questions, just subscribe and you have access to make comments and ask your questions. So let's proceed. So you a share of his profits. Now, another way profits can come is dividends. So when you own the stock of a particular company, one of the ways you can benefit from it is if that company is a dividend paying company. Sometimes quarterly, sometimes by year, sometimes annually. They pay part of the profits they make, they share it with everyone that has their shares with them. So let's say, for instance, Dangote Sugar made a profit of, let's say, 5 million, and they are sharing with 100,000 units holders. You own just 10 of that. So your own fragment of profit is going to come to you just on those 10 pieces of shares that you hold. However, there are some companies that don't pay dividends regularly, or they don't even pay dividend. But if they are not paying dividend, it means they are plowing back their profits into the company. So instead of giving you the profits at the early stage, they are telling you, let's put this money back into the company so that when the company makes more money, then your stake in the company increases. Just like I was explaining the other time that you bought 10 pieces of Dangote cement at 500. If they don't pay you dividends, they could decide to bring in back all the profits they made back into the business. When the business has expanded, it's going to increase the value of the business, and at the same time it's going to increase the value of what you own in the business. Thank you very much. You're getting it. So as a shareholder, you have the right to vote, and another thing is it shows you profit. Okay, so I've explained this because of our time. Her time is moving fast, and I still have a lot to let you know tonight. So I'm going to move away from this since you understand what share, stock, and equity is. So what you should know about the stock market, I'm going to run through this very quickly. What should you know about the stock market? While every business venture into business to make money, the reality is that they may not always make profits. So people come into the stock market and believe that, but the reality is that not all of them losses. And if you are bought into that kind of business, if they are making loss, you make the loss with them. If you are making profits, you also make the profits with them. Which means that as a potential investor, you need to make your research on which kind of company do I need to invest in, so that I'm not susceptible to their losses. Because if you're investing, it means you believe so much in the company that this company is going to grow and is going to reward me. That is why you're investing. But the sad truth is that not all companies will make profits. Another thing you need to know is that there's a level of risk involved in the company is making a profit, you also make profits. So it means that if they are making loss, whether they stand with them. If they are making profits, you enjoy the ride with them. Not all businesses in the stock markets, not all businesses are in the stock markets. Some of you know MTN and Airtel, for instance. But you realize that if you check the stock market, you won't find Globalcom. because they are private companies. So it's not compulsory that all companies must be listed on the NGX, on the Nigerian Stock Exchange. You can choose to be listed and you can choose not to be listed. Globalcom is not listed, but if you look at MTN and Airtel, you realize that they are listed on the Nigerian Stock Exchange. So why then do we have public companies? Why are some public companies and some private companies? Now, the reason why they are public companies is because the exact reason why they want you to buy into their shares now is what I want to explain. Now, when a company is coming public, a company can either raise money either by taking loans. They can also raise money by taking public offers, which means that when they want to raise money, they can come to you and I and say, okay, we need you to come and invest with us. When we make profits, you make profits. Whatever happens, we'll pay you dividends. As we are growing, you grow along with us. Every company that is coming to you make profit. No company will come to you and tell you that they'll make a loss. So they will tell you that I'm coming to you with this proposal in the next 2 years, in the next 5 years. This is the projection we have. This is expecting. This is where we expect to be in the next 5 years. When you look at their proposal, I feel like, oh, this is fantastic. Especially when you have checked their books. Oh, this is fantastic. I'm ready to dive in. So yeah, in that, yeah, more like it's more like you're partnering with them. So they can either go to the bank and take up a loan. But what a loan? If they make losses, they must repay the bank's loan. They must pay the bank's loan. So whichever way, this loan. So instead of paying this, what they now do is come to you with a proposal. Then, if you have checked their financials and see that okay, I love what you are doing, then you can now say, okay, I want to buy into this company. Then that is why you now say you want to buy a stock. You want to own a fragment of what they own. So that whatever happens to that company, either they are making profits, you are making profits. Do we understand? Please let me know if you are getting me in the comment section. So now, when you own that stock, who decides the price of the stock? Who decides the price of the stock? Now, you and I decide the price of the stock. I just want you to find with what and what you should know about the stock market. Now, the other time I was explaining to you that if you bought Dangote cement at 500, now somebody else is coming to the market and feels like, oh, Dangote cement should be worth more than 500. I'm willing to buy it for 520. Then it means that the price automatically changes from 500 to 520. But somebody else can come to the market and feel like, how can you sell this thing for 500? I feel it's not more than 480 naira. So if the parent believes that it's not more than 480 naira, and somebody who also owns that stock 80, then the price also changes to 480. So in the market is because somebody is willing to sell lesser or lower than the current market price, and somebody is also willing to buy lower than the current market price. Or somebody is willing to buy higher than the current market price, and somebody is willing to also sell at the current market price. So I know I've been talking, so let me take it as a slice of bread or a piece of. Now, if somebody wants to sell, let's say this cake, let me go with a slice of bread. If somebody wants to sell this wheat bread now for 200 naira, let's say that's the only one that is left, or we have few of these left, and somebody feels like instead of somebody taking this for 200 naira, I'm going to take it for 400 naira. You, as the owner of the bread, you can decide that, wow, this is a plus for me. I would rather take this 400 naira for this and probably go somewhere else, see if I can get something else that will be 200 naira and buy it. So when you decide to buy, when the buyer decides to buy this for 400, even though the actual price was 200 naira, but somebody feels it is worth more than 200, or somebody is desperate, believes that I know what I can do with this if I own it. So if somebody buys this for an higher price, then automatically the price changes from the initial 200 to 400. So that is how the price in the stock market is decided. Now, like I said, I want you to get familiarized with some of these terms and what you should know about stock markets. There is something we call CSCS and CHN. I know I'm going ahead of myself, but I'm trying to say this because I want you to know what this is. I don't want to skip this in the course of the video. So when you have a CSCS and a CHN, I'm going ahead of myself for a purpose. So CSCS means Central Security Clearing System, and your CHN means Clearing House Number. Now, just like you have in your bank accounts and your BVN. Oh, it's writing right now. Okay, good. Yeah, thank you. Sorry about that. So just like you have your bank accounts and you have your BVN, your CSCS in the stock market just represents your bank account. So this is custom made for you. This is just your account. Now, you know that when you have bank accounts, you can have UBA, you can have Zenith, you can have GT. Just the same thing with your CSCS. If you are operating with different brokers, you can have more than one CSCS. But if you have one CHN, all your brokers can use the same CHN for you, just like you have your BVN. So, like I said, this is a little digression, but I want to make sure that I don't forget before the end of the video. So let's move on. Having known this, why should you start investing? Either you're investing in the stock market or you're investing in fixed incomes like mutual funds, treasury bills, money market funds, FGN savings bonds, federal government bonds. Either you're investing in all of these portfolios, either you're investing in lands or even investing in commodities. There is one thing that is paramount. Why should you invest? Everybody is most different reasons. But why do I think you should invest? Now, before I mention mine, let me ask us very quickly. So, why do you want to invest? I have here financial with freedom. So let me ask us, let me check the comment section. Why do you want to invest? Let me have a comment coming before I show you my slide for the reason why you should invest. So personally, this is a personal thing now. So why do you want to invest? Let me see your comments. I'm waiting for you in the comment section. I'm waiting for us in the comment section. So why should you invest as a person? I have here that's financial freedom. Everybody wants to be free. Everybody wants to buy whatever they can buy at whatever price that they call it. Why should you invest? I'm still waiting for us in the comment section. Why should you start investing? Why should you start investing? Let me take a comment and we'll move on because our time is short, our time is limited, and I won't want to waste our time waiting. Oh, somebody said wealth creation. Thank you very much. Somebody said wealth creation. Corey, they said wealth creation. So one of the reasons why we want to invest is wealth creation. You want to create wealth. You don't want to be poor. Your parents were poor. I beg your pardon. Some of us we grew up from humbling background, and you told yourself, this pattern is not going to repeat itself. It's going to end with my parents. But with me, no. So some of us, we want to create wealth. Somebody said multiple streams of income. You are making money from just one channel when God has given us many channels to make money. Some of you have quite a number of talents. You can remember the story. I don't know, for those of us that are Christians, some of us, if you remember the story of that person with 5 talents, when when he was given 5 talents, he went ahead to make more, to multiply it from 5 talents to 10 talents. So you can make multiple streams of income. You can have multiple streams of income because you don't have just one skill. That one that had just one talent, you remember what God told him? He said, why didn't you, even if it's just to invest it, why did you hide it? Why did you go and keep your money in savings accounts? Even if it's just to invest it, no matter how small the interest is, why put it in a savings account? The same thing that happened to that one person with one talent. I remember that God was telling him, even if it's to invest my money, at least it will have made a little profit. So even if it's to invest your money too, at least it will make a little profit than sitting idle and taking bank charges in your bank account. So somebody said multiple streams of income. Thank you, Omotola Fabi. Multiple streams of income. Another one say I'm investing for multiple streams of income. So good. That's from Ife. But now let me open you up to more reasons why you can invest. More reasons why you need to start investing. Number one, you cannot work all your life. Your money should work for you while you sleep. How many of us have seen aged people still working? Sometimes you feel pity for them. Sometimes you are wondering, where are the children of this old man? Where are the children? Sometimes you're asking questions in your heart. What did this man do in his youth? What did he do that didn't make him set system to take care of himself in the old age? While I'm not saying that some of them didn't do enough, some of them tried their best. But the matter is, maybe their best was not enough. The matter is, maybe they were not exposed to knowledge like you and I are here today now. You are getting this information. So you know that there's something you can do while you are young that can help you while you are old, that can fund your retirement, that can fund the lifestyle you desire to live in your old age. Not living from hand to mouth, not depending on somebody to bring money, not even depending on your children. The scripture says that a good man will leave inheritance, not just for the children, for the children's children. So you're not waiting for your children to bring money. There's an adage in Yoruba that says that there's a particular rat they call lokete, that when he's old, is going to suck from the breast of the child. Are you waiting to suck your child's breast? Only children suck breast. So why should an aged person suck breast? So you leave inheritance for your children and your children's children. So you can't work all your life. And if you not work all your life, then you need to start planning now. What do I need to do that when I stop working? When I'm no longer in my active years, how do I maintain myself? How do I sustain myself? What do I need to do that even if I choose not to work for the rest of my life? How will I live? These are realities we need to stare ourselves. These are realities we need to bring to ourselves like mirrors. Let's face it. Let's face the fear at once. So you can't work all your life. Your money should work for you while you sleep. And that is one of the reasons why you're investing. So that whatever is coming in from that investment will be able to sustain you. Another one is future security. You don't want to live all your life depending on people for financial support. I've said that earlier. I'm going to be very fast now. Another thing is you want to replace financial anxiety for financial peace. For some of you, when the landlord is coming, when it's a month or 2 weeks to the time when the expiration time to pay your rent, you realize that you can't sleep anymore. You start having insomnia, you start having headache, you start taking sleeping pills. It's not that you can't sleep. Everything is just money. This is financial anxiety at work. So the reason why you're investing is because you also want to have financial peace. So imagine that you have a particular investment. I sat with one of my clients recently and we're looking at how he's going to be paying his rent. I sat with him. This is what you need to do. So we created a system that is going to pay a monthly interest for him. So if let's say your rent is 600,000 naira, we created a system that 50,000 naira will generate 50,000 naira on a monthly basis. So when he generates that 50,000 naira on a monthly basis, in 1 year, his 600,000 naira is complete. So he doesn't need to think about house rent. Are we following? If you are getting value, let me see in the comment section. I'm getting value, I'm getting value, I'm getting value. Let me know, just be sincere truth. If you are getting value, if you are not getting value, type in the comment section. I'm not yet getting value. Let me know in the comment section. So, like I was saying, I sat with that my clients and we devised a means that will generate 50,000 naira monthly. Now, it's what is monthly income, is monthly. Then the cumulative is now 12 months. So we created a system that will pay his rent. So at the close to the expiration of his rental, he doesn't need to bother himself. The money is ready. Thank you very much. I'm getting value. He doesn't need to bother himself. There's no anxiety. You don't have the fear that the landlord is coming to knock at your door. You don't have the fear that your children will soon be sent out of school. You are not afraid of what to eat. Thank you very much. Okay, somebody said, I want to beat. Okay, Olamilekon said, I want to beat in order to beat inflation. Thank you very much. You also want to be ahead of the inflation rates in the economy. That's very good. Thank you very much. So we want to be at peace. So that's one of the reasons why you're investing. Now, another major reason why you have to invest is it opens you up to opportunities. Imagine that you suddenly see that maybe a particular house, maybe somebody puts your landlord puts your house for sale, just for instance. Let's say it's 10 million naira. I know it's hard to get any house for 10 million naira these days, but let's just say it's 10 million naira. And let's say you have been investing consistently for some time. Maybe out of that 10 million naira, somehow you have been able to invest up to 8 million naira. If for any reason you think you should, you know you already have something that you can fall back to. You already have 8 million naira. While I will not advise that you pull out the whole of your 8 million naira down as a down payment, and I can discuss with my landlord that, okay, I'm paying you instrumentally every month for the next 1 year. But what if you don't have anything in your, lose out on opportunities? Opportunities will be flying around left, right, center. You just be staring at them and you'll be sitting down. Ah, I wish I had money. You only wish. You only wish. If horses were wishes, everybody, even the poor, will ride on horses. All right. I think we've been able to connect now. So can we hear me now? Just let me know in the comment section. Can you hear me now? I'd like to know in the comment section if you can hear me now. So let me share. Let me share my screen. Just let me know if you can see my screen. Oh yes, you can see my screen. Can you see my screen? Oh, okay, that's fine. Okay, so we stopped at. Can someone remind me where we stopped so that I'm sure you didn't miss out on anything? But just in case, okay, let me just continue. I said it opens you up to opportunities. I don't know if you still remember, if you got that before we had that network issue. I said it opens you up to opportunities. Then it helps you to have a comfortable retirement. Then I thought about passive income. When I was talking about opportunities, I was talking about that. I thought about the issue of the housing. That's what if you have a particular house that you want to buy? Let's say the house is 10 million naira and you already have 8 million naira in your investments. Even if you pull out 5 million naira to make deposits for that particular house, you can discuss with your landlord that you'll be paying on monthly basis till you finish paying the remaining amount. But what if you don't have that installment? What if you don't have that your down payment initially? That means opportunities will be flying front, right, left, center, and you'll not be able to take advantage of it. It could be anything. It could be a land. It could be a particular investment. It could be another kind of investment. And you'll be missing out because you can't pull funds from one portfolio to another portfolio. So these are some of the things we miss out when we are not investing. Another one is passive income. Some people pay their children's school fees just from their passive income, not even their active income. Some people have different portfolios sponsoring different aspects of their life. One portfolio is sponsoring the feeding, another one is taking care of the children's school fees, another one is paying rent, another one is paying one thing or the other. So these are some of the reasons why we want to invest. Please, can we see my screen? I want to be sure we can see my screen because from what I'm seeing here, I don't think my screen is visible. So another one is fund the lifestyle that you desire. Okay, you can't see my screen. Okay, so I need you to see my screen. So I'm going to share my screen again. Okay. Oh, somebody said you can. Another person said I can't. So which one do I believe now? I'm doing everything possible to make sure that my screen is up. I'll continue talking and continue to try that network glitch. I was talking about, oh my God, another network glitch. So the other time I was talking about fund the lifestyle you desire. Some of you must have seen people on Facebook, people on the social media, your friends, your neighbors, right? Oh, yeah, we said you can only see me. So give me so now just I need to work on that. I need you to see my okay. Is it visible now? Is my screen visible now? It's still not visible. Okay, let me call for help with this. Just a moment. I need to call for help with this because I need you to see my screen so that you can follow me. I'm trying to wonder what's on, and I really wish you can see my screen. It's sharing. Sorry, I apologize. I apologize. I apologize. I apologize. I'm trying to do everything possible for you to see my screen. Okay, so since I'm not able to do that, let me continue. So you want to be able to fund that kind of life you desire. But if you are not investing, how did you do it? It means you continue to work, and your time is what will be paying for the kind of lifestyle you want to live. Of which your time, your active time, should not pay for your lifestyle. I spent so much time here. Why you need to invest? So I need to move up to type of stocks and who should invest in them. What are the different types of stocks that we have? Oh, I really wish you see my screen. What are the different types of stocks that we have? Number one, I talk about dividend stocks. Dividend stocks. The other time we're talking about dividends I'm going to use dividends and profits exchangeably so that you understand. So when we are talking about dividends, it's just the profits that the company is making and they are sharing with their shareholders. So like I said the other time, that if you own Dangote Cement and you own 10 of the shares, when they are paying their dividends, your own dividend will just be a fragment, what 10 of it represents from the profits they are making. So let's say there are 100 shares and they made 100 million. It means each profit, of course, I'm just using that as an example. So it means 100 shares, 100 million. That's 1 million naira per share. So if you're going to take your own profits, that's going to be 10 million naira because you own 10 of those stocks. Of course, there's no company that pays as much as that. But you have company that pays as much as 40 naira, 30 naira per share, depending on the number of shares you own with them. So dividend stocks are stocks that distribute a portion of their profit to shareholders on a regular basis in forms of dividend. So when you hear people saying that they gave me my dividend, I've seen my dividend, I received my dividend, what they are just talking about is that they are received from the profits that is accrued to them because the company is making profits from the money you are giving to them. You are a partner of that company. You are a stakeholder in that company. You own parts of that company. So what belongs to you after making their profits, then they're also going to give you. So that's what we mean by dividend paying stocks. So if we say we have dividend paying stocks, it means that there are also companies that don't pay dividend. I think I've explained that earlier. But what happens if they don't pay dividends? They plow back the profits they make into their business so that their business can grow. And sometimes some of those companies, after their growth level has reached a certain stage, they also begin to pay dividends. But what happens to you if you are a holder of that stock is that the value of what you own begins to increase. Just like I mentioned when I was explaining equity to you the other time, the value of what you own increases. I still wish you can see my screen, and I'm not yet able to do that. I really want you to see my screen. I don't know why I'm not able to do that, but I'll continue. So another thing we have is growth stocks. One, I thought about dividend stocks. Another one is growth stocks. Growth stocks are stocks of companies whose sale and profitability are rising quickly. Now, when it's not a dividend paying stocks and they plow back their profits into imagine that you are making 100% in profits and they are not sharing anything to their shareholders. Instead of sharing to their shareholders, let's say, for instance, Presco. Presco is a company that is into palm oil. They plant a lot of palm fronds and they are into different businesses as regards to palm. Now, instead of paying you profit, paying you your dividends, they can decide that let's plow back this money into the company so that we can buy more expanse of lands and even plant more palm fronds. So now when they continue to do this, after some time, these palm fronds begin to bring its fruits, they begin to harvest, produce into finished packages. At the end of the day, the value of the company increases. Then what you own with the company also increases. So that's a growth stock. So the price grows easily. The price grows faster. So this is usually for people that have high risk tolerance. I'm going to get there. So those that know that they can manage risk, they are not keen about dividend. They are what matters to them is let my money just continue to grow with this company. So long is a good company. I want my money to continue to grow them. So most of these companies, they are promising what they promise you is growth, not necessarily returning your profits either quarterly, biannually, or even annually. Let me move quickly. Another one we have is value stocks. Value stocks are shares of companies that trade below their intrinsic value. That means it trades below real value. Let's say a company should worth like 300 naira and is currently trading around 200 naira. And for you as an investor, you have cited that this company is supposed to worth like 300 naira. Why is it trading at 200 naira? I will buy into it. So you will buy that company and you'll be waiting for when the company is going to realize its true value, when it will actually get to 300. So you are sitting in that stock patiently. So we call it value stock. The companies are often well established, but it's just that at the moment, somebody is not paying them the true worth of who they are. Just like I was explaining the issue of the bread the other time. Somebody can cite that this bread should be worth 400 naira, but it's still being sold at 200 naira. So an investor goes in, buys all the bread for 200 naira, and is waiting for it at and buys all the stock maybe for 400 naira, and the person knows that this thing is worth 600 naira, buys at 400 naira, and later sells at 600 naira. So we have value stocks. They are thought of as traditional, well-known business that have already become market leaders and need more room for further growth. So most times they are well grounded, but there's always room for growth for the invest in a value stock, if you should invest in a dividend paying stocks, or you should invest in a growth stock. I'm going to look at that quickly, but before I do that, let's talk about penny stocks also. Penny stocks are stocks of a small public company that is traded at a low price. So any stock you see that is below 10 naira is a penny stock. Now, one thing about penny stock is that they are prone to high volatility. If you buy a penny stock, let's say a 2 naira stock, let's say you buy 1 million shares of it, that is 2 million naira. If there is an increase of just 1 naira, because you own 1 million shares in it, if there is increase from 2 naira to 3 naira, it means you have made a profit of 1 million naira just because a stock moved from 2 naira to 3 naira. But not the same with value stock. If you buy Dangote cement at 500 naira and you have 2 million naira, it means you are only able to buy 4,000 units of shares. You only have 4,000 naira increase. Do you understand what I'm saying? So penny stocks can easily make you money as well as it can easily help you to lose money. So if that money moves from 2 naira to 1 naira, it means that you will lose a million naira. But if you buy a value stock and it's 530, if it loses 1 naira, if it goes to 529, the only thing you are losing is the 4,000 units of shares that you have bought. Please let me know if you understand in the comment section. Do you understand what I'm trying to explain? Between value stock and penny stock. Please let me know in the comment section if you are getting what I'm explaining to you. Please let me know in the comment section. I'm teaching you the difference between value stock and penny stock. I'm sure you also understand when I talked about growth stock the other time. I'm still trying to work on you seeing my screen. I really need you to see my screen. And I'm still trying to work on that. I'm really trying to work on that. I need you to see my screen. That's what I'm trying to talk, and at the same time, I'm trying to trading, which means is selling either 9 naira, 8 naira, is selling below 10 naira. So any stock that is below 10 naira in the stock market is a penny stock. Now, I said the penny stock is prone to high volatility. By high volatility, it means that it can either increase easily or it can reduce easily. So let's say you have a penny stock of 2 naira and you bought 1 million of it. It means you bought at 2 naira and you bought 1 million of it, which means the total value of what you have in that company is 2 million naira. Now, if the price moves from 2 naira, oh, you can't see my slide. Oh, if the price moves from 2 naira to 3 naira, because the price is now 3 naira and you own 1 million of it, it means what you now own in that business, your equity now in that business has become 3 million naira. 3 naira times 1 million. So the value of what you own, which is your equity that I was trying to explain with the picture of the balloon the other time, the value of what you own is now 3 million naira as against a value stock. Let's say, for instance, the Dangote cement we were talking about the other time. If Dangote cement is 500 naira and you have 2 million, if you buy Dangote cement at 500 naira and you bought 2 million worth of it, you will only be able to buy 4,000 units of shares. Only 4,000 units of shares. Do we understand? Now, when you buy that 4,000 units, if there's a price movement from 500 to 501, it means you have gained just 1 naira. It will now be your 1 naira times your 4,000 naira, which means you have gained 4,000 naira additional. Now, for penny stock, there was an increase of 1 naira. For your value stock, there was an increase of 1 naira also. But for your penny stock, you could buy 2 million, you could buy 1 million shares at 2 naira. But for your value stock, you could only buy 4,000 shares at 500 naira. So 1 million difference in penny stocks gave you extra 1 million naira. But at the same time, if it made a loss and it went from 2 naira to 1 naira, it means you also be losing 1 million naira. So instead of having 2 million naira, you will now have 1 million. But if it's your value stock and you have bought it for 500 naira, if there is a loss of 1 naira, let's say from 500 to 499 now, from 500 to 499, your 1 naira will only mean that you have lost 4,000 naira. Now, let me say this quickly. You don't lose on gain in the stock market until you have sold your stake. Every profit or every loss is on paper, not until you sell. You have not made the profits, not until you now understand. Okay, it's Omotola. Omotola, do you understand the difference between the penny stock now and the value stock? Now we are 1 hour into the session, and I'm beginning to think that we should have a part two of this, most especially because you can't even see my screen and you have a lot to learn and benefit by you even seeing my screen. Because some of those pictures sticks better when I'm explaining, and when you're seeing this picture, it sticks better and it helps us to have a good understanding. So if it's screen, yes, Omotola, thank you very much. You said you now understand. Thank you very much. So let me know in the comment section tomorrow what time. Let's give ourselves a time. What time tomorrow? Let's have a part two of this. I don't like the fact that I can't share my screen with you. I've done everything possible to be able to do that. And it's even showing me that I'm sharing my screen. Unfortunately, you are not seeing it at 6 p.m. So let's have more suggestions. Let's have two more suggestions. Then I'll have a peek. Let's have two more suggestions. 5 p.m. is fine for me. I'll take that. I'll make that. So let's into the session. So we'll take this as Nigerian stock markets beginners guide part one. So we'll take this as the investing in Nigerian stock markets beginners guide part one. Oh, somebody said 5 p.m., 6 p.m. Let's see if we have people this time that will choose comments. Oh, somebody else said 6 p.m. All right, so 6 p.m. tomorrow we meet. 6 p.m. tomorrow. So two people have agreed on 6 p.m. So 6 p.m. tomorrow we meet. Meanwhile, if you have any questions today, please drop in the comment section for me so that I can take your questions. And if you know you got value today, please let me see in the comment section, I got value. Let me know what you learned. I got value. If you got value in today's session, let me know you got value. Tell me I got value. If you are not subscribed, subscribe to the channel, like the video, and invite more people. Everyone that has been asking you for urgent 2k, this is the time to invite them. Those that have been asking you for urgent 2k, invite them, invite your family members, invite them so that they won't think that, oh, you have all the money and they will be milking you. Invite them, teach them how to make money. Stop giving fish, teach them how to fish themselves. So let everyone be here tomorrow 6 p.m. I will just do a quick recap for those that were not here today, then we'll continue from where we stop. So 6 p.m. tomorrow we meet. Thank you very much, Amotola. Thank you, David. Thank you. Ify, he said, I got value, I got value, I got value. I said, thank you, Coach Benita. Thank you too for coming. And I'm grateful that you want to change something about your financial life. You want to change something. You want to start investing. You want to prepare for your retirement. You want to have passive income. And by that, the whole world will become a better place. Somebody said, I know why I should. Oh, I can't see this comment now. Said, I know why I should and the different kind of stocks that there are. Yes, somebody knows that there are different type of stocks. That is not just, you don't just go into the market and pick a stock. Now, let me tell you something quickly. This is for you, that those of you that are watching this now. I started investing in Nigerian stock markets around 2007. And I started investing ignorantly. I'm saying this because Omotala said, I know why I should and different kind of stocks. I didn't know that we have different kind of stocks. Anything flying on my table, I buy. I was buying different kind of stocks then. I was just buying. Once I hear this one, I buy. Once I hear another one, I buy. I was investing ignorantly. Maybe it paid off, yes. But if I had known, if I had knowledge, if I saw somebody to guide me like I'm guiding you today, it would have been different. So we'll continue from here tomorrow. Let me say good night. I will meet 6 p.m. tomorrow. From me now, it's good night and have a nice evening, and also have a good Sunday tomorrow. So see you tomorrow, 6 p.m. Tomorrow, don't forget to invite somebody, and I'll see you 6 p.m.